Ron Siegel Radio, your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Yeah, this is the show that connects the dots of confusion, delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit in current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And to remind you, if you ever have any home or finance related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you, even if you don't have any needs today. Save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, we are celebrating today. Hey, we got a lot on our docket today. Some days it's amazing how there's such a minimal amount. But today, we've got a full plate, no pun intended. We get to start the day off with National Cheese Toast. That's a good one. Maybe we'll throw a little egg on top of that. Avocado on top of the cheese toast. That'd probably look pretty good. We're going to move throughout the day, and now we've got some National Double Cheeseburger Day. Doesn't go very well with my diet. Where do you get a good cheeseburger? Don't tell me In-N-Out. I know there's a lot of people that like In-N-Out. Hey, Josh, have you been to that new In-N-Out that they're opening in Vegas yet? I know you don't go to the Strip, but I understand it's supposed to be massive. Or I'm not even sure if it's opened yet, but I know that it's supposed to be a massive, massive place. What is it, a multi-story? Now, I don't know whether they're going to do it or not, but could you imagine what the Strip would be like with the cars that line up for In-N-Out? And it takes forever to get a burger there, so I don't know about that one. I hope it's just a walk-in, because otherwise the Strip traffic is going to be worse than it always has been. But let's move right along. National Linguine Day. I like linguine. Although I do prefer the smaller pastas. I have no problem getting food on my shirt. So when it's a long pasta like that, I find it to be problematic for someone like me. I like to keep my clothes clean, and those longer pastas, they just seem to make a mess. And we close out the day, National Cream de Mint Day. Now, I don't know about cream de mint, but here's the deal. Holy cow, in a martini glass? Okay, anyway. So cream de mint, if you look up the history of cream de mint, and yes, I have no life, so I did look up the history of cream de mint. It was found by a French pharmacist, Emile Gifford, and he basically found it to study the cooling and digestive properties of mint. And of course, if you're in France, you make everything into a cocktail. So I guess we can go in and order a cream de mint liqueur and say that we're using it for the health benefits. I guess that's just where you go with something like that.
It is what it is.
Although, something, I've expanded some of my peptide protocols and some of the digestive protocols. Those are pretty good as well. But you got to do your own research. So this morning it took me a good amount of time between my bariatric, my weight loss peptide that I take. 89 pounds now. Thank you. We're down 89 pounds. rsrlinks.com/shot, or just drop me a note if you want to save a bit of money. And I can tell you how to do that, but you got to do your own research. I'm also taking one for the inflammation I've had in my knees. I got rid of the drugs that I was taking. The inflammation in my knees, much, much better. Vitamins, you got to do your own research, but there's a lot there. Let's see what the markets are doing today. We've got the Dow Jones Industrial Average is up 8 points. The NASDAQ is up 188. S&P 500 is up 35. Oil up 49 cents a barrel. Gas prices are going, they're up just ever so slightly, though. So I did look, national average, a gallon of gasoline is up just about a quarter of a cent from yesterday. And a year ago, they're down about 3 cents from a year ago. Now, we look in California, our gas prices went up a penny overnight, more than the national average, of course. But we are down from $4.77 a year ago to $4.65 right now. Still, if I'm not mistaken, we are the leaders of the country. Although Washington, $4.65 is a half a cent higher than California right now. So Washington out there. What's going on in Nevada, though? I mean, they've been going up more than anybody else. You got to watch and see. Nevada, I thought there must be some funny business going on there in Nevada, if I'm going to look it up and see. But, last couple of weeks ago, we were talking about Nevada at 340, and now we're talking about Nevada at 392 as the average for the statewide average, 392. I guess it must be, I don't know. You just got to watch and see what's going on over there. We're watching a lot of things right now because we're looking at the 10-year Treasury down at 403. And the mortgage bond is up 15 basis points. We like when the mortgage bond goes up, but it means absolutely nothing until Wednesday afternoon. Although we're going to get some news today, and I think it'll be good news for the markets. I'm sure it's already baked in. And let's talk a little bit about baking. And no, I'm not talking about food. I'm talking about markets, because this is Ron Siegel Radio, your home and finance connection. So let's talk about this. So when we're looking at the markets, Stephen Milan, he's supposed to be about 5:15 California time. They're going to have a cloture vote in the Senate for his confirmation. A couple hours later, they'll have the vote of the full Senate. Ironically enough, the senators actually have to work today. So they want to make sure that Milan gets seated before the Federal Reserve starts their meeting tomorrow. So they've got a 2-day Fed meeting tomorrow, Wednesday, about 11 o'clock California time. Will they get the results of their meeting? Now, we'll probably know what the results are going to be. Nick Temeros, also known as the Fed Mole, works for the Wall Street Journal. He generally gets a scoop on what's going to happen at the Federal Reserve meeting. And he puts a report out in the Journal. And basically what he says is going to happen because they don't want to spook the markets. So when I say the numbers that are out there right now, and I looked earlier today, and there's about a 100% chance, I think is what I saw earlier today, that we're going to get a 25 basis point cut in the Fed funds rate. So that's going to go down a quarter. Now, I know that. You know that. The markets know that. So what's it going to do for the markets when it happens? I'm going to submit to you the market will probably go up, or the yields, the rates will go up. And I hear all kinds of people saying, Ron, I'm going to wait until the Fed cut because rates will drop by a quarter of a point. No, the rates already dropped a quarter of a point after the Jackson Hole meeting. Look back at the charts from August 22nd, and you'll see that already happened. Now, there is about a 4% chance, according to the markets, that the Federal Reserve will cut 0.5%. If that happens, then we'll see some improvement in the markets. We'll get better bond bond yields on both the 10-year and on the mortgage bond. Remember, the bond yields is what I'm talking about, not the bond rates. So when we're looking at that, it's like 94% chance that we're going to get a quarter point cut, and there's a 6% chance we'll get a half point cut at the meeting tomorrow. Nick Timmeros will tell us about that, probably in a report that he'll probably file that in the morning. But remember, that quarter is already baked in, and there is a theory in the markets, and it holds: buy the rumor, sell the news. So the rumor is already out there that there's going to be a quarter cut. The news is when it happens. Now, in this case, we're going to get the FOMC chair, Powell, will have his commentary.
Such an idiot.
And he does that at 11:30 our time. And, he's always behind. So we'll see what he has to say. But we're also going to get what they call the dot plot. That's the Federal Reserve's statement of economic predictions. Before the meeting starts, all of the members of the committee have to submit their dot plot of where they think interest rates are going, where they think unemployment is going, where they think inflation is going, and several other factors. That'll be coming out on Wednesday. They'll release that, but each of the Fed members has to turn that in before the meeting starts, so they're not influenced by the meeting. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, what a Fed rate cut could mean for mortgage rates, the hidden cost of free credit protection. Mortgage rates just saw their biggest drop in a year. Patience won't sell your house. Pricing and strategy will. All that and more. Reach me anytime. Off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452. You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990, and every day at this time, OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They do not tell us points paid, points received, or the APR. They tell us the number you need to put in your mortgage calculator to figure out what your principal and interest payment will be if you don't have a mortgage calculator. Hey, Josh, we should get a mortgage calculator on our board of directors, on the household board of director page. rsrlinks.com/HBOD. rsrlinks.com/HBOD. But if you want the mortgage calculator, go to the mortgage app. That's simple. rsrlinks.com/mobile app. rsrlinks.com/mobile app. What did rates do yesterday? Conventional 30-year fix, 6.263. Jumbo 30-year fix. That was down. Well, the conventional was up. The jumbo was down at 6.432. FHA 30-year fix, 6.082. VA 30-year fix, 5.727. That was down. USDA 30-year fix, 6.056. That was down. Everything down except for the conventional 30-year fixed. And remember, strategy beats rate always. So there could be strategies to get you a rate down into the fives. Yeah, that would be a nice one. Now, do we want to pay points to get into the fives? I'm going to submit it's probably not a good idea unless the seller is paying for it. If the seller's paying for it, by all means, go ahead and do that. If you want our thoughts on the market, we post them again in our household board of director page, rsrlings.com/HBOD, rsrlings.com/HBOD. So what are the markets doing today? Well, of course, I'm going to tell you, we've got the S&P 500 is up now 40 points. We like to see that. We've got the 10-year treasury kind of stuck there at 4.035. We've come down a little bit. I think we might have got even to touching that 4% range a few days ago. But I don't think we've broken the 4. So we're working on that. Again, that's a psychological number. It doesn't mean a whole heck of a lot. So, it's not like it's a technical number in there. So we don't look at it too close. 3.998 was our lowest number that we hit. So we watched that one. We watched the mortgage bond is up 16 basis points right now. Remember, whenever the bond goes up, rates go down. So as of right now, we're probably looking at a little bit better rates. But I will tell you that I'm suggesting almost everybody right now should be floating their loans going into the Fed meeting, because we know what the Fed is supposed to do, cut by a quarter, but they could surprise us and go to a half. If they go to a half, we'll see some improvement in mortgage rates, and that's a good deal. Now, I am going to tell you that if you've already locked in and you're not sure what you should be doing, well, we've got the solution for you. rsrlinks.com/second look. rsrlinks.com/second look. And the way we put the second look in there is 2ND look. rsrlinks.com/2ND look. No spaces. And if you go in there, fill out the form, and send us a copy of the loan estimate that you're looking at, we'll take a look and we'll tell you, are you getting a good deal? Could you do better? Is it achieving your unique goals and objectives? Those are all the important issues, because as you know, strategy beats rate always. Strategy beats rate always. So we look at every one of those things as we go through this entire process. And let's take a look and see what's driving the market right now. Well, we've got Stephen Moran's confirmation will be voted on by the Senate this evening. That'll determine whether or not he'll be able to vote on Wednesday. He is expected to be confirmed. As I've told you, the Fed is expected to cut 25 basis points with a small chance of a 50 basis point cut. The market is already pricing in that 25 basis point cut, with the 10-year down about 30 basis points. That's 0.3% since Powell telegraphed a cut on August 22nd at Jackson Hole. The important part of the meeting will be the Fed's summary of economic projections, which includes their dot plot showing where each Fed member thinks the Fed funds rate will be at the end of the year, as well as their economic projections. And of course, Jerome Powell's press conference could also provide crucial clues regarding the Fed's thinking. And we also got information from the director of the CBO, the Congressional Budget Office. Phil Siegel explained their 3-year forecast on CNBC. The CBO believes that the economy will grow by 1.4% in 2025, pretty close to a stall speed. This is in line with the Fed's last projection as well. They expect the unemployment rate will peak at 4.5% at the end of this year from its current level of 4.3%, which would be a good thing for the bond market and pressure the Fed to continue cutting rates. The CBO thinks inflation will rise to 3.1% due to the tariffs, but they also think there are some good aspects to them. They forecast that the tariffs will reduce the deficit by $4 trillion over the next 10 years, 3.3 trillion reduction from revenue, 700 billion from less debt service. The CBO forecasts there will be 1 million less people from the immigration this year and 700,000 in coming years. It's interesting to see some of the media cite that although there is less hiring, there is less supply, and that the break even has fallen significantly. While that may be true at fringe, if firings rise like we saw last year, there's not the absorption from the hiring side, and the unemployment rate can go up quickly. Additionally, the break even has never been near zero or negative like we have been seeing. The CBO does not contemplate what ifs and only goes by what is law today. But of course, their forecasts would change if the tariffs, for example, had to be paid back. University of Michigan survey showed that consumers are feeling more pessimistic about the current and future state of the economy. One of the biggest concerns was the labor market. The share of consumers who expect the unemployment rate to rise in the year ahead was reported at 65%. Again, a weakening labor market will likely help bonds and force the Fed to cut rates several times this year. That is the Mortgage Minute, brought to you by rsrlinks.com/mobile app, rsrlinks.com/mobile app. And I did share some information on our social channels this morning discussing about some of these different weakening areas of the market. Consumer sentiment, 56.4. That's gone down a bit. Higher unemployment expectations on average, 60% expect higher unemployment expectations. Personal savings rate, 4.4%. Bad time to buy a house, 87% of the people say it's a bad time to buy a house. Now, why do I share that information? Because when 87% of the people say anything, do the opposite. Always better to go against the grain when you're looking at the markets, because if you're going with the grain, well, you're probably going in the wrong direction. Some good information there. I think we're going to do this in Your Credit Matters segment today, being brought to you by rsrlinks.com/debt-free, rsrlinks.com/debt-free. The Federal Reserve, the Fed, meets this week, and expectations are high that they'll cut the Fed funds rate. But does that mean mortgage rates will drop? Let's clear up the confusion. The Fed doesn't directly set mortgage rates. Right now, all eyes are on the Fed. Most economists expect they'll cut the Fed funds rate at their mid-September meeting to try to head off a potential recession. And Josh, this got a graph. I don't know if you can grab this one. It was in the real-time. It was under real-time real estate, but I just moved it. Right now, all eyes are on the Fed. Most economists expect they'll cut the Fed funds rate at their mid-September meeting to try to head off a potential recession. According to the CME Fed Watch tool, marketers are already betting on it. There's virtually a 100% chance of a September cut. And based on what we know, there's about a 92% chance it'll be cut 25 basis points, and an 8% chance it will be bigger cut 50 basis points. And that's the chart you're seeing on our screens right now. If you're watching us on ronsiegelradio.tv, any of our socials, or the ABC News and Talk, AM 1490, FM 98.1 video feed. So what exactly is the Fed funds rate? It's the short-term interest rate banks charge each other. It impacts borrowing costs across the economy, but it's not the same thing as mortgage rates. Still, the Fed's actions can shape the direction mortgage rates take next. Why? Mortgage rates already saw this cut coming. Here's the part that may surprise you. Mortgage rates tend to respond to what the financial markets think the Fed will do before the Fed officially acts. Basically, when markets anticipate a Fed cut, that outlook gets priced into mortgage rates ahead of time. That's exactly what happened after weaker than expected jobs on August 1st and September 5th. Each time mortgage rates ticked down as financial markets grew more confident a cut was coming soon. And even though inflation rose slightly in the latest CPI report, the Fed is still expected to make a cut. So if the Fed goes with a 25 basis point cut, 0.25% as expected, that's likely already baked into current mortgage rates, and we may not see a dramatic drop. But if they go bigger and drop their federal funds rate by 50 basis points instead, mortgage rates could come down more than they already have. So where do mortgage rates go from here? While the upcoming cut may not move the needle much, many experts expect the Fed could cut the Fed funds rate more than once before the end of the year. Of course, that's if the economy continues to cool. Now, if you're watching us again, we've got another chart for you. We expect the 3 federal funds rate cuts this year. 1 cut, 1.1% of the people. 2 cuts, 19.7% of the people. 3 cuts, 79.2%. And they usually assume a cut to be 25 basis points. As Sam Williamson, senior economist at First American, explains, quote, for mortgage rates, investor confidence is a forthcoming rate cutting cycle could help push borrowing costs lower in the back half of 2025, offering some relief to housing affordability and potentially helping to boost buyer demand and overall market activity, unquote. If multiple rate cuts happen, or even if markets just believe they will, mortgage rates could ease further in the months ahead. But here's the catch. All of this depends on how the economy evolves. Surprise inflation data and unexpected shifts could quickly change the outlook. Bottom line, mortgage rates likely won't drop sharply overnight, and they won't mirror the Fed's moves one for one. But if the Fed begins a rate-cutting cycle and markets continue to expect it, mortgage rates could trend lower later this year and into 2026. If you've been waiting and watching the housing market, now's the time to talk strategy. Even small changes in rates can make a meaningful difference in affordability, and understanding what's ahead helps you make the best decision for your situation. If you want to chat about it, let's book some time. BookRS15.com. BookRS15.com. That's Your Credit Matters. Brought to you by rsrlinks.com/debt-free. rsrlinks.com/debt-free. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, patience won't sell your house. Pricing and strategy will. Mortgage rates just saw their biggest drop in a year, and the hidden cost of free credit protection. We're going to talk about all that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990 at ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Patience won't sell your house. Pricing and strategy will. Waiting for the perfect buyer to fall in love with your house in today's market. That's usually not what's holding things up. And here's why. Let's be real. Homes are taking a week longer to sell than they did a year ago, according to Realtor.com. Homes are also taking longer to sell. The typical home spent 60 days on the market in August, 7 days longer than last year, and now above pre-pandemic norms for the second consecutive month. This was the 17th straight month of the year of year-over-year increases in time on market. Part of that is because there are more homes on the market. So with more options for buyers to choose from, they aren't getting snatched up quite as fast. But there's another big reason: price. The average listed price isn't going up, and that matters. Today, a lot of homeowners are overshooting their list price. They remember the big climb in home prices a few years ago, and they don't realize how much has changed. One of the most important but often overlooked changes in today's housing market is this: average list prices have held steady for the past few years. That's a big shift from a typical market where prices were rising steadily each year, and it's significantly different than the 2021-2022 surge where home sellers could set their price just about anywhere and still attract multiple offers over asking. But now that trend is leveled off, and sellers who want to stay competitive need to take note. If you're watching us on ronsiegelradio.tv, any of our socials, or the ABC News and Talk AM 1490 and FM 98.1 video feeds, you are seeing a chart saying asking prices have been flat for over 3 years. Wow. Here's what this says about today's market. Buyers are a lot more price sensitive, and sellers can't keep trying to inch the bar higher, and their house will sit without any offers. Homeowners who expect to bring in more than their neighbors did last year may be setting themselves up for a longer, more frustrating experience. And while homeowners are starting to realize prices can't keep climbing at such a rapid price, the hiccup is that list prices aren't actually coming down yet as a result. They're hanging around, holding steady. And sellers who make this mistake are often holding on to hope that they'll be able to eke a few more dollars out of their sale. But that's the problem right there. Got to go and get the right strategy. rsrlinks.com/salesmax. rsrlinks.com/salesmax. If you want to sell today, you need to be in line with where the market is today. Not last year, not during the pandemic, today. Because buyers will skip over homes that feel overpriced, even if it's only by a little. It's not that they aren't interested. It's just that in a market where more homes to choose from, buyers can be more selective and sellers don't get the same benefit of the doubt. If your house isn't priced to sell, buyers just move on. They've got other options anyway. 4 signs your price may be too high. You may already be feeling this. If your home is listed and you're not seeing results, watch for these common red flags noted by Bankrate. Number 1, you're not getting many showings. Number 2, you haven't gotten any offers or you've only gotten lowball offers. Number 3, buyers that do come to see your house leave overly negative feedback. Number 4, your house has been sitting on the market longer than the average for your area. If any of these sound familiar, know that waiting it out won't fix it, but adjusting your price will. So what's the solution? Work with your agent to make sure your house is positioned for today's market. Depending on what's happening in your local area, a few weeks without traction can raise questions for buyers about whether your price is realistic. And don't worry, it doesn't have to be a big drop. Even a small adjustment can be enough to bring the right buyers through the door. And if you're worried you won't get the high ticket sale price you thought you would be able to land, keep in mind that your equity has probably grown quite a bit. Chances are you're still ahead of the game simply because you invested in a home over the last 5, 10, or more years, but you're still winning when you sell today. Bottom line, patience is not a strategy. Pricing strategy is. rsrlinks.com/salesmax. rsrlinks.com/salesmax. And hey, what do people want? They're buying payment. So make sure you just have your agent put in every piece of marketing. Seller has approved special financing terms with their preferred lender. Who's the preferred lender? We are. Because we understand the buy down strategy. rsrlinks.com/buy down. rsrlinks.com/buy down. And if the buy down is not done properly, well, then you've got to be able to go and it's going to blow up the deal at the end. That's why you're putting in your marketing materials. Seller has approved special financing terms with their approved lender. Not any approved lender, the seller's approved lender. So let's put together the right strategy. If your home isn't moving, the market is telling you something, and the price change and the right price or strategy can change everything. Your house will sell if you price it strategically. Talk to your agent about what buyers are willing to pay right now to make sure your home stands out for all the right reasons. That is the Real-Time Real Estate segment brought to you by rsrmoney.com. rsrmoney.com. And hey, be sure to go to that RSR Money or bookmark rsrmoney.com. Bookmark rsrmoney.com, because hopefully by later this week, maybe beginning of next week, you're going to be shocked at the changes we make to that site. rsrmoney.com, including free credit monitoring. We're going to be putting that in there. It's not all set up yet. That's why I say bookmark the site rsrmoney.com. We love coming out with all these different tools for you to help you out and see where the benefits are. Your Credit Matter is brought to you by rsrlinks.com/debt-free, rsrlinks.com/debt-free. The hidden cost of free credit protection. So free credit lock offers flooding in your inbox, but they only protect 1/3 of your credit report. I am Ron Siegel, Certified Liability Advisor, helping people build wealth through strategic debt management. Here's the thing about credit locks. They're not necessarily a bad idea, but they're not the complete solution. Most people think they are. When you lock your credit with one bureau, you're only protecting 1/3 of your credit profile. You need to lock all three, Equifax, Experian, and TransUnion, to get full protection. And here's where it gets interesting from a cost perspective. Equifax offers their lock and alert service for free for life. TransUnion's True Identity gives you the basic lock for free, but they might charge you a subscription fee down the road. Experian, they bundle everything together at a cost of $25 a month. Now, I had another client, a small business owner, who locked her credit and then forget about it. 3 months later, she's trying to refinance her home to consolidate some high-interest debt, and the whole process got delayed because she couldn't remember which bureaus were locked or how to unlock them quickly. This brings me to a bigger point about protecting your financial future. Yes, credit locks can help prevent identity theft. But what about the debts that's already on your credit report? What about those credit cards charging you 18 to 24% interest while your home equity sits there earning nothing? I see too many people spending time worrying about hypothetical credit problems while ignoring the very real money walking out the door every month in interest payments. Strategy beats rate always, but strategy also beats worry. If you're concerned about credit protection, absolutely look into these locks. Monitor your credit regularly, but don't forget to look at the bigger picture. What's your household blended interest rate? How much cash flow could you free up by repositioning some of that high interest debt? If you want to see how strategic debt management could improve your household's cash flow while you're protecting your credit, visit rsrlinks.com/Sora, rsrlinks.com/Sora, and let's put together a plan that actually builds wealth. This is Ron Siegel, and remember, strategy beats rate always. I am a certified liability advisor, helping families build wealth through strategic debt management. That is the Your Credit Matters segment, brought to you by rsrlinks.com/debt-free, rsrlinks.com/debt-free. And hey, just remember, as I've shared with you a little earlier in today's broadcast, don't forget we're coming out probably later this week, early next week. We're going to have free credit monitoring. So you're going to get a notification as long as you set up your account properly. We don't do it because we don't save all your data. But you'll be able to go into rsrmoney.com. You're going to go in there. You're going to set up your account. You're going to put in your personal information. We don't see it. It's just between you and the very, very secure app. You're going to put in your personal information. You're going to put in your, and you're going to get you'll get updated every 7 days. It'll update your credit score every 7 days. But anytime somebody pulls credit on you, you're going to get a notification from them. Well, when somebody steals your identity, one of the first things they do is pull your credit report because they want to get your information. So, or they're going to go and they're going to request a new line of credit. So that service, they go and they say they request a HELOC against your house. The home equity line of credit company is going to go and pull your credit. You're going to get a notification from the tool that we're setting up for you for free. Make sure you bookmark rsrmoney.com. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. Mortgage rates just saw their biggest drop in a year. We're going to talk about it. What does that mean for you? Reach me anytime. Off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Facebook.com/Ron Siegel Radio. And if you missed any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference in the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Mortgage rates just saw their biggest drop in a year. You've been waiting for what feels like forever for mortgage rates to finally budge. And last week they did in a big way on Friday, September 5th. The average 30-year fixed mortgage rate fell to the lowest level since October 2024. It was the biggest one-day decline in over a year. What sparked the drop? According to Mortgage News Daily, this was a reaction to the August jobs report, which came out weaker than expected for a second month in a row. That sent signals across the financial markets, and then mortgage rates came down as a result. Basically, we're seeing signs the economy may be slowing down, and as certainty grows in the direction the economy is going, the markets are reacting to what is likely ahead. That historically brings mortgage rates down. Why buyers should pay attention now? This isn't just about one day of headlines or one report. It's about what the drop means for you. The recent changes show you money, saves you money when you buy a house. If you're watching us on RonSiegelRadio.tv, any of our socials, the ABC News and Talk, AM 1490, or FM 98.1 video feed, you are seeing a chart of the items here of how the recent drop in mortgage rates impacts your monthly payment. The chart shows you an example of what a monthly mortgage payment, principal and interest, would be at 7%, where mortgage rates were in May, versus where rates are roughly now. So on a $400,000 home loan, fixed rate mortgage, 7%, $2,661. $400,000 loan, 6.29% fixed rate mortgage, $2,473.28, saves you $187.93 a month. Compared to just 4 months ago, your future monthly payment would be almost $200 less per month. That's close to $2,400 a year in savings. How long will it last? That really depends on where the economy and inflation go from here. Rates could drop lower or they could inch up slightly. So make sure you're connected with a good agent and trusted lender. They'll keep a close eye on inflation indicators, job market updates, and reactions to upcoming Fed policy to gauge where mortgage rates may go from here. But for now, focus on this, where no one can say, while no one can say for sure where rates are headed, the fact that rates broke out of their months-long rut is a good thing. If you've been feeling stuck, this could make the start of a new chapter. As Diana Olick, senior real estate and climate correspondent at CNBC says, rates are finally breaking out of the high 6% range where they've been stuck for months. And you know what I think of Diana Olick. She finally might have got something right, but I'm sure she'll mess that up too. And that gives you more reason to hope than you've had in quite some time. Bottom line, this is the shift you've been waiting for. Mortgage rates just saw their biggest decline in over a year, and if rates stay near this level, it could make a home you couldn't afford just a few months ago feel possible again. What's today's rates save you on future monthly payment? Give me a call at 800-306-1990, 800-306-1990. As you know, all of these things are unique to you, so you got to look and see, how does this fit into your unique goals and objectives? That's the real-time real estate segment brought to you by rsrmoney.com, rsrmoney.com. So just remember, if you are out there shopping for a house, We talk often. Get the second look. It costs you nothing. Our Second Look Advantage program costs you nothing. All you have to do is go to rsrlinks.com/second look, rsrlinks.com/2ND look. And that's going to get you a second look. Send us your loan estimate. And if you're buying a house, send us the purchase agreement. We'll have a short consultation and we'll look at it. We'll tell you, hey, you got a great deal. Or, hey, you know something? You just told us this is what your goals and objectives are. Maybe you could do a little bit better. Maybe this is what you should be looking at. And we'll tell you how, where, all those things to find that, get that second look and make it happen for you. Because our objective here is, as a consumer advocate doing this radio show since 2010, is to show you options of where you can do better, how it can be beneficial for your household. We've talked about this one before. Don't always go in looking for a lower price, because strategy beats rate always. Look at the buy down program, rsrlinks.com/buy down, rsrlinks.com/buy down. The buy down program will save you, I don't know, tens of thousands, hundreds of thousands of dollars over the life of your loan. As I shared with some folks that I was speaking to, I was a keynote at a conference on Wednesday and Thursday last week, and we were sharing a real life scenario where someone had a 4.375% interest rate, 4.375. Now, I'm sorry, 5.375. Now, does everybody get that? No. We had the strategy in place. If you're selling a house, well, you want to be looking at the buy down program because you want to tell your agent, hey, call Ron and have him walk you through the buy down program. Now, if you don't do it right, it can trigger high cost and predatory lending violations, which causes a problem for you. We don't want to cause you problems. We want you to get this done the right way. So what we recommend is putting into your listing agreement, putting into every place on all, when the agent is doing all of the marketing, seller has approved special financing terms through their preferred lender. When you put that in there, seller has approved special financing terms through their preferred lender. We can then know what you're looking at. We'll do all the work and get a dashboard ready, a website ready, so that the listing or the buying agents know exactly what you're offering. And when they call us, we'll educate them on how to do it. So we have it all put in place for you. So again, rsrlinks.com/buy down. And that's all part of the strategy to maximize your sales price. rsrlinks.com/salesmax. rsrlinks.com/salesmax. And as always, we ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean for engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.